It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, January 21st, 2016, wrapping up an incredible week that we've had, not only in our live trade room, but here on this nightly newsletter. What a great week. Third full week of the month, almost in the books. We got a Friday trading session in store for us tomorrow. Remember, guys, Fridays are all about early in, early out. I'm looking for trades before 11 o'clock, and then we'll hold open positions into the afternoon. But early in, early out, we get a busy plan for us for tomorrow's Friday trading session. We'll jump right into it here. Crude oil is bullish, but 3 pushes higher, sent price to the highs of the channel. So we expect to see a two-legged correction off the highs before the next round of buying. Bulls want to stay patient. We do have a scenario, though, for a double press high on crude. Stay tuned for more on that. E-mini S&P, the E-mini, is bullish with a long-term channel. And we have a nice, beautiful triangle pattern setting up for tomorrow. But it appears, if you look closely on the S&P, the sellers missed the test of the channel low. So we're going to keep an eye out for a fake break low before it shoots higher. You know the S&P is not going to make it that easy on us. How about gold? The yellow metal also bullish after a perfect correction off yesterday's highs, if we don't say so ourselves. Now, this should entice the buyers back into this market for the yellow metal. So we'll look for the buyers to hold the next pullback to prove it. If they can't hold the next pullback, we actually still have that spike in channel support area still lingering out there right now. So we got a plan for gold. The euro is bullish after recovering from today's reaction to the ECB report. But the overshoot of the channel high, a vigorous overshoot at the channel high, and a very well-behaved bull flag on the euro tell us to wait for a two-legged correction with 3 pushes. The magic number on flags is 3 to overshoot that channel low before looking to get long. So ultimately, S&P, euro, gold, crude, we got a great plan in store for you guys and gals tomorrow for a Friday trading session. Before we jump into our charts, though, and plan our strategies for tomorrow, I do want to remind you, make sure you watch this video on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel, check the description of the YouTube video and you'll find a link that'll take you over here to our trading blog. First of all, I would love to extend an invitation for you guys and gals. Come out and join my live trade room. We are open Monday through Friday. Grab a free pass in the upper left-hand corner. If you're not an advanced member here at schooloftrade.com, I got a free pass for you, upper left-hand corner. Lower left-hand corner, you can register for our nightly newsletter mailing list. Now you'll get an email from me every evening when the newsletter video is ready to go. I promise no junk in your inbox, nothing but good stuff from me. All I need is your name, your email address, and then when you register, check your inbox. I'm going to send you a verification email. Right below the video tonight, you can download all the charts that you'll see me using in tonight's video. I apologize last night. For some reason, the old SlideShare website wasn't allowing me to upload, so I'll give it another shot here today. This is the first time we ever had any issue with it last night, so I apologize last night, but again, that was the first time. Usually we'll have no problems there, though. I'll be putting it up tonight, and we'll see how tonight goes. But you can download the charts that I'm using in tonight's video right below the video tonight, and then over on the right-hand side, don't forget, separate to our free pass, you can register for a trial membership, and you can learn all about how we trade here at School of Trade. You can learn more about what it means to be a member, and don't forget, we always have someone standing by 24/7, 365 to answer all your questions. No question too big or too small for us on that live support on the right-hand side of our blog. Let's jump right in. We get a busy newsletter, and of course, it's a Thursday night. I don't want to keep you guys waiting. Tomorrow, we have Friday, January the 22nd. Again, don't forget, Fridays are early in, early out. We'll be opening up our trade room tomorrow morning at 8 a.m. Eastern Time. And I always say, cut it at 11 o'clock on Fridays. You're really going to have a good reason to be trading in the afternoon on Fridays. Bottom line is professionals are not entering into new positions on Friday afternoon. So you're basically driving at midnight next to a bunch of teenagers, right, that have been drinking on Friday afternoon. So what I always say is it's dangerous to trade on Friday afternoon. So get in early, get out early. We got news at 9:45 and 10 o'clock, which honestly is like perfect for a Friday because that's that little bit more juice that's going to keep that morning session going for us into 11 o'clock. And then if you happen to be curious about the Baker Hughes rig count, I love how now that shows up now that everybody's watching it, as if that has anything to do with the price of oil, right? The number of rigs in the ocean. Anyways, the bottom line is we got news at 9:45 and 10. Cut off tomorrow right around 11 o'clock tomorrow morning. right? Again, be careful trading Friday afternoons, right? Volume drops. And really the big thing about Friday afternoon is it's a bunch of gamblers, people who've buried themselves. What we have learned about human nature is that as the clock ticks down at the end of the day, at the end of the week, at the end of the month, don't even get me started on the end of the quarter. What ends up happening is people who have put themselves in the red, right, for the day, the week, the month, or the quarter, they take excessive risks, almost as if to double down, right? Some of the biggest debacles we've seen over the last 10 years, those rogue traders. Well, if they would have been watching those rogue traders, they buried themselves in losses, and then they tried those Hail Mary trades to kind of dig themselves out of big losses, and that's what caused those huge losses, right, to erupt in the books of some of the asset managers. So bottom line is stay away from the gambling hour, the last few hours of the day, right, the week, the month, and definitely the quarter. All right? Now that's your learning moment of the day, right? All right, let's jump in. Crude oil is bullish, but 3 pushes higher. Sent price to the highs of the channel, so we expect to see a two-legged correction off the highs before the next round of buying. Now we have a multi-day bullish channel and a spiking channel with 3 pushes up to the highs, which tells us the wise buyers will take profit at the highs and wait to buy more at a cheaper price. Now look closely, and you can see that double top at the high missed by only 1 tick. Look closely here. It's a little bit tough to see on the chart right now, but that double top, it literally missed by 1 tick. Now that tells us the sellers definitely sold the highs, right? They defended the highs, which then caused a little fake break at that low, right? Notice how they ran through that little low? What that does is that runs out all the buyers holding their positions and now will force them to get back in, right? That's ultimately what it does. It also is going to now give a lower low, which means every bearish trend follower now is going to be looking, right, for that just very typical 50% pullback, right, to sell it back down. Now, that one tick, those sellers definitely defending the highs, which caused that break of the swing low. Now the buyers are trying to finish the job, right, back at the highs. And if they fail, these sellers will push this price back to those channel lows again tomorrow. Let's play that game, what if price rises, what if price falls? Well, first of all, let's assume price keeps rising here. If price keeps rising, this now becomes a double press of a bullish channel. Now, we talked about this a few videos ago, I believe. What do you think a double press tells me? What do you think double press is? A double press is an exceptionally overstrong, overbought, right? When I think of a double press high, if I'm still in the trade long at that point, I see that as being a gift from the trading gods, right? If you're going to make it that easy and give me more profit, I'll take my money right now. Thank you very much. So a double press high in most scenarios, we'll obviously wait and see what happens tomorrow, will result in a very large correction back to the downside. We may also see these buyers, right, get some payback from those sellers over the past few weeks, and they may try to make a run for a gap fill up at 31.41, got major resistance. So if this thing does turn into a little hoopla for those buyers tomorrow, right, you can expect 31.41, and then you've got to be looking for that next pullback to fail and look for a relatively aggressive sell because it'll be a very bullish market. But just beware, if we get up to that 31.40, that'll be about that measured move. That's it for the bulls, right? That should be it for the bulls, right? If we get up there early, you've got a shot to get it back down. If we get up there late, right? If we end up around that 31.41 tomorrow after 10:15 a.m., it'll probably end up measured moving, right, and then going sideways. So we're going to make sure we only buy those lows of that range, right? It'll be a bullish bias to that range. So all you can really do is just take nibbles at the downside. I wouldn't expect to get much more from that. Now, as this price goes higher, like I said, the completion of that channel rotation, high, down to low, up to high, right? Look what resulted in a double press low. 1, 2, right? Double press low, shoots higher, right? Markets are nothing more than groups of people. Most people, most humans, I assume you're one too, we try things twice. If we're not successful after the second time, we usually give up and we usually learn and go in the opposite direction, right? So the buyers try run it up, right? They successfully test the high. They try it again. There's that market inertia, right? That's why I always tell people, I don't care what resistance is in your way. You don't sell that high until you see, well, them hold a pullback, right? So we go lower, they hold this pullback. Okay, now you can sell. But you don't sell a double top in a bullish market. When do you sell a double top? You sell a double top in a bearish market, right? Go ahead and sell double tops all day long in a bearish market, right? You're going with the market's inertia, right? That steamroller effect. This is a really good example. Mark goes up to the high of that channel. You can see the buyers buy the pullback, probably unknowingly, right, that there was a multi-day channel there, unknowing that it was an overshoot of that bull spike and channel. And here's the reality, guys. It doesn't matter that we made that move. The buyers are still going to come in. They're still going to follow it. And that's why you can't just blindly sell that double top, because there's no reason why it can't just go, wait, I don't understand. I want to keep going higher, and it'll run you out of that trade. It's the reason why we say, do you want to be right or do you want to be rich? If you want to be right, go ahead and donate money all day long to the market, because the market, as they say, can remain irrational longer than I can remain solvent, right? That's the old saying. So we don't want to sell this until we see what's likely coming next, and that is a new lower low. We hold that pullback, right, and that's what takes us lower. So as we stand right now, again, price goes higher. It's a double press high. I'll be looking for that next pullback to fail, then hold the next pullback, right, to be able to sell it short off those highs, right? If it does keep going, you know where that runaway market's going. Just be looking for a trading range to finish off that day. I would sit on hands at that point, though, because this thing will be pretty tuckered out, right, even for crude. What's more likely here, though, is the buyers see that lack of follow-through at that high. It's a lower high, and they're probably going to back off this a little bit. If they hold that pullback right now, the sellers are going to attack. Really, what I think is going to happen most is that all the buyers are going to go, okay, I'm good. If they see that pullback hold, that will allow the sellers to take it back. And then now we're looking at that kind of lingering spike in channel down around 29, right? If I had to guess for tomorrow, I would say a measured correction, a two-legged correction. Look for the sellers to fudge the next retracement, right? And then look for the buying opportunities. It really is rinse and repeat here at School of Trade. I mean, this is stuff we do every day, all day. So you've got that spike in channel up. You guys are experts on spike in channels because you were with me last night. That correction zone to the spike in channel is just so convenient right back to the low of that channel. So now you've got a good plan for up. You got a good plan for down. Again, don't you sell just because it's resistance. Wait for proof. We'll be trading that market live in real time tomorrow morning with all of our students. How about the S&P? S&P is bullish with a long-term channel, and we have a great triangle pattern setting up for tomorrow, but it appears the sellers missed the test of that channel low. So we'll be keeping an eye out for a possible little fake break of the low, right? Before it shoots higher. The multi-day bull channel is easy to see that the recent move back to the lows missed it by about one tick. I'm looking right there. Right? You draw bull channels off the low, keeping in those bodies, and of course you can see it just barely missed it. Now, this is the S&P we're talking about. This is a market that rarely makes mistakes. I will tell you, there are situations where the market makes a mistake and then it goes back, corrects itself, and then goes. So in this example, what this tells me is there's business left to be done. And this is where channel rotation comes in, right? We rotate from the high down to the low, up to the high, down to the low. Same thing we talked about on crude, right? Low, up to the high, and now, again, it looked like at first they got it, and if they would have tagged it, we would be talking bullish right now, right? Well, we are talking bullish, but we're talking bullish after this correction here, right? So this tells me that we haven't finished the rotation, and just looking at it right now, it looks like A, B, C, D, right, into a measured correction zone. Again, if I had to guess, that would be where I'm looking for. You've got a pretty obvious area of support right around 1830. That would be the last ditch effort, or the kind of the line in the sand for me to be bullish tomorrow. Even if we get a nice strong correction here and it kind of goes lower, I'm still going to be looking for those sellers to fail on that next correction, right, for a chance to buy it back up. If they don't fail though, right, if they hold that correction, then you got to think they're making a run back for that 1800, which we talked about in last night's newsletter. Right now, though, we have that bull triangle, kind of the bull spike and channel here. I mean, this really screams bullishness. It really does scream bullish. We break up, we go into our triangle, we break out. Again, almost like a market mistake that it came back in. It'll probably come back one more time. And remember, guys, when you're looking at these triangles, that's exactly how you want to be trading a triangle. Right, let it do its thing. The magic number is 3. It'll break out, pull back, and then what's the trigger? The trigger is going to be seeing it test the point or in the area of the point, and then you always want to wait for a nice, good, strong signal candle as that Weber band tends to snap back and really go for you. So again, if I have it my way tomorrow, we'll pull back and make a nice, easy failure into pullbacks, right, to complete that channel rotation. We may, which probably is more likely, this is the S&P, it's not going to make it that easy. I would expect to see a two-legged correction, then sellers get in trouble, right, and we go higher. The perfect situation is we bounce right at the tip, right, we see a nice green candle, right, and we're off. Wouldn't that be nice? But this is the S&P, so now you've got bull scenarios. If it happens to take off to the upside, just make sure they hold the next pullback, and then you've got the green light, right? Because again, we haven't completed rotation, and it looks like it's about to complete that rotation right now for you. So as long as they complete the rotation back to that low, you get a green light to look for seller failures to be a buyer. And of course, if it takes off to the upside on the S&P, wait to see a pullback hold, and then look to be a buyer as well. How about some gold? Gold is bullish after a perfect correction off yesterday's highs. I mean, I don't want to say this, Bobby. This is pretty much exactly what we talked about last night. I hope somebody made some money along with us out there in YouTube land. Obviously, right, we got that correction off the highs. This nice deep pullback should entice some of these buyers back into the market, right? That's what we were waiting for. So we'll look for the bulls to hold the next pullback, right? Want to see them hold the next pullback. To prove it for us. Now, look closely, though, at this chart, and you can see they haven't tested that spike and channel support level back at 1090.2. So if the buyers don't hold this pullback, we can expect a two-legged correction to test that support area. Now, if you recall, and again, this is why I highly encourage you to watch every evening, right? I know, I'm a shameless promoter of my own newsletter. It's free, for crying out loud, right? Anyways, so we talked about this last night, right? We had that undershoot of the high, right? Remember that from last night? And so we saw that undershoot after 1, 2, 3 pushes. We knew that it could go either way, right? And we pretty much knew that if they couldn't hold that pullback, then we'd tumble. Well, look what happens. The sellers hold the next pullback. Guys, this is exactly what I'm talking about. If you don't feel comfortable, the most aggressive trade short is going to be the failed pullback, right? That's the one where you're a little bit ahead of proof. Right, that first little failure, that failure short where the buyers couldn't hold that pullback, that's the most aggressive one, because at that point, you're a bullish market, you're anticipating it becoming a bearish market. Then look what happens. They hold the next pullback. When they hold that next pullback, if you're a bear, that is your green light. You sell this, you sell everything, and you know where it's going now. Right? So that's how you use my newsletter along with what happens in real time. Don't forget, we do all this with our students, right? So you don't have to do this all by yourself every night. Okay, so we hold the pullback. Now we know where we're going. What is very interesting is that look at the size of the undershoot and look at the size of this cute, just beautiful little overshoot. I mean, could we have scripted this any better? I mean, you would think that they literally listened to my newsletter and did exactly what we said last night. I'm not lying. Go back and watch last night's video. Just watch till the end of this video, and then it's on a loop. So the very next video after you finish this video will loop into last night's newsletter. Okay, and I apologize for the bad jokes on last night's newsletter. I'm working on my material. Anyways, so we have the undershoot, overshoot. The 3 pushes up, correct. The sellers hold the pullback. Textbook. Now let's get this party going. One thing we talked about here tonight, we did not see a full correction back to the base of that spike in channel. And we did a lesson on spike in channels last night where we talked about this, right? Typically what's going to happen is that spike in channel is going to end up correcting. We see it correct back down. The sellers think it's bearish. They try to sell that low, right? And we jump higher. A beautiful seller failure after an under over and a test of the low of the channel. So here's a scenario. I can't even say the word bearish right now. It's very difficult to be a bear right now. What was very funny though is that when you check the news media today, this is what I love about what I do for a living. If you turned on the television today, or if you looked at any news website, what did they say about gold? Gold reacts from Draghi's comments today. Really? We get nothing for technicians at all, huh? No channel rotation, no 3 pushes higher, right? Heck, I mean, once a quarter you get mad money, right? My good friend Carolyn shows up on Kramer's show, right, from time to time. But like Draghi was responsible for this? Are you sure? This is exactly why I say turn off the television. It's all well, I wouldn't say it's all garbage, right? It's not all garbage. We got the Patriots game on this weekend. And yes, I grew up in New England. You can't hear it in my accent. I lost it. I always tell people I tried to get rid of my accent on the plane ride out west. I went about as far away as I could to escape those cold winters. But it comes out in me sometimes when I talk about these charts. So anyways, bottom line is Draghi had nothing to do with this move off. Well, maybe he did. I don't want to be that smug. But guys, the technicals gave you a much bigger heads up, right, than Mr. Super Mario Draghi this morning at 8:30 or 7:45 Eastern Time. Turn off the television. Tune in every night to the newsletter. That's all you guys need to know. Bottom line here. Where are we going next? We're bullish, right? We're definitely bullish. Scenario 1. We hold this pullback. We've got proof. And we have yesterday's close at 1106.3. We have 1109. And then, oh my goodness, a possible rotation target all the way back up at those highs, right? Rotation, grasshopper. Rotation all the way back up. Okay? That's if they hold that pullback. If they hold that pullback, you know that every buyer and their brother-in-laws, next door neighbors, pizza guys, going to be buying this, right, if they see that pullback hold. Okay, it's going to try to make a run back at that high. It's just, but here's the problem with this. Here's the problem. This is like postcard perfect. You know what I'm saying? Like undershoot, overshoot, 3 pushes up to a correction. It's so perfect. I'm like, is this a dream? The perfect pull. It almost seems too perfect. So if we do get the pullback to hold here, I would imagine everyone, again, like I said, the brother-in-laws, sisters, next door neighbors, pizza guy, he's going to be buying this thing. That's what the problem is. I would expect this gets a little bit sloppy. We make a little fake break low, finish the job, right, and then make the move higher. So that's the 2 scenarios I see right now. If they hold the pullback, again, if they hold the pullback, they give us no choice. We have to be bullish up to that 1106.3, right? That's major resistance. 1109.9, we'll call 1110, and then, of course, to complete, right, the rotation target all the way back up. And by the way, look for a measured move, right, for a short-term interim target, right? Look for a measured move for a short-term interim target. What is somewhat likely just because postcards don't happen very often on real charts. You know, what's likely to happen here is, right, we blow through it, we actually use the low of that channel as resistance, sellers see it, they sell it back down to that 1090 even area, and then the buyers go, ooh, baby, this is a nice cheaper price here, and of course they look to buy into seller failure. So if we do get below that channel low, look for it to act as resistance, down to 1090, and then we'll look for those sellers to fail, right, and off the races we go. Pretty good opportunity. A lot of learning and earning opportunities on these charts this week. I hope you learned something right along with us. Now, I got another doozy for you here today. The euro looking very good. Another kind of, well, maybe not a postcard chart for us tonight, but another really good example here. There's a lot of great teaching opportunities in this chart. The euro is bullish, clearly, after recovering from today's reaction to the ECB report. Okay, but the overshoot of that channel high, and we have a very potential new bull flag, right? It's looking like a flag right now. I almost called it a triangle, but it looks more like a flag, right? This new bull flag tells us to wait for a two-legged correction with 3 pushes to overshoot the channel lows before looking to get long tomorrow. The news this morning sent prices tumbling, but the bulls responded with vigor as they, that's a great, I'm full of good words here today, right? As they pushed price about 2/3 of the way back to where the sellers have their stops above the news candle high. We're going to talk about those news candle highs. It's a very important theory for you to understand. The overshoot and the bull flag are big variables, spell check there, JJ, telling us to stay patient so we can see if that support level around that 8,600, right, is going to be tested, and then look for seller failures to push back, right, to those highs. Let's take a look here. Let's go left to right. First of all, we have the news candle. Now, what is the news candle here? Well, the news candle is basically the candle that starts this whole move lower. Now, I want you to think for a second. You sold on the news. If you're still in this trade, where's your stop? Think about it, right? You guessed. You said, no, man, I'm going short. I know Joe says don't trade the news, but heck with JJ. He doesn't know what he's talking about. He's a crazy. You know what? I'm selling anyways. So he sold off. Where's your stop? Is your stop still hanging out up here? Probably. So 93.60 area, that's the news candle high. Now here's what you got to know about that. They're going to defend it. Sellers are going to defend it as it gets closer. Think about it, right? If you've got your position riding on it and you've got about $1 million in your trade account, you're going to start selling big full clips as well. Now think of the opposite side. What if it breaks through 93.60? What happens if a big position gets taken out? Buys, right? So if we run above that 93.60, you usually see a big, strong reaction through it, right? So way that I see this is, I see this as being again, sellers here, selling more here, selling more here. But once they get up around those highs, they're going to have to admit they were wrong, and they're going to have to liquidate. And when they liquidate, that previous high of day at 99.10 should be relatively easy to get to from there. That's the first thing. Now the second thing I see here is we have this AB, CD measured move, and again, just this blow off, right? This little blow off overhead here. Now at this point, I count 1, 2, 3 pushes higher, measured move into an overshoot of a channel high. Now, we talked about the overshoot of a channel high on the gold last night, right? Overshoot, undershoot. They overdid it. They'll take their profit. The sellers also see it. There's a self-fulfilling prophecy to an overshoot, and we should correct to the opposite side. Okay? That's why I'm looking at 8,600. Now, here's going to be your timing tool for tomorrow. I think this is probably going to be the most useful information. We have a flag. Big flag pull up. And you can see the highs line up, copy and paste the low, and there's your flag. What you want to be thinking about when it comes to a flag is the number 3. The bear flag is always one of the most challenging patterns you can trade, because what's going to happen is you're going to see 1 push, 2 pushes, 3 pushes. By the time the market moves 3 pushes lower, a lot of bulls are now confused. And what usually happens is it usually then shoots higher, fooling all the sellers who think this is a bearish market, and this goes into becoming an A, B, C, D. Now, of course, for every pattern, there's a failure. The failure is really difficult to pick up on, because what happens is rather than shooting higher, it gives us 1, 2, 3, but then what happens is it kind of grinds. Once you see this grind lower, you know where we're going. Again, after 3 pushes, and that's going to be your best timing tool tomorrow. If after 3 pushes, what I always look for is, after that third push, I look for the next attempt for the sellers to fail, and I use that, right, seller failure, right? Look for a little 50% sell zone, right, a little fib zone there. Look for the sellers to try to sell it again, right, after that third push, and then you're off the race to the upside. Now, what happens, though, is if it holds, right, what happens is it does this. It goes higher, but they actually hold it. When you see them hold it, you know the bulls are beat. Now, obviously, nothing's guaranteed. It may end up keep going, but it's highly unlikely. What's more likely is the market acts very confused and it grinds lower until it finally runs out all those bulls, right? Because that's what it's doing, right? The bulls that bought it on the way up, they're holding their stops all the way down here. It runs them out, and guess where it goes? See ya, sucker, all the way back up. The term would be vindictive. It almost has the sound of sarcasm, right? As it's just kind of trickling down, going, I dare you to buy me. I dare you to buy me. And then by the time you get the confidence to sell, it's all the way back down to that low, and it goes, actually, you know what? I'm feeling a little bit perky now, and it goes jumping through the highs there. That's why flags are so difficult. You know the secret, though, for tomorrow. Look for what? Those 3 pushes, right? So there's 1, here's 2, and again, those 3 pushes usually result, right, in a measured 2-legged correction. I can't tell you exactly where it is, but that's definitely what you're looking for tomorrow. And then, of course, again, 1, 2, 3, if it holds, I would say anything underneath that 8,600, and you got to start being a little bit suspicious. Actually, you know what? I take that back. This area right here, that 85.18 to 83.69, that's really going to be where those buyers start to get a little bit nervous, and that's when it should start to trickle down lower. Again, so be careful on that, right, being a buyer below the 8,400, right, for tomorrow. All right, guys, you got a good plan here for the euro, the gold, the crude, and the S&P. Now, as always, Fridays tend to be a little bit crazy towards the end of the session. Don't forget, everything I talk about today, you've got to apply it in real time tomorrow. Put it in context. If any of these markets turn into runaway steam freight trains tomorrow, don't trade against it. Like I said, end of the day on Friday, sometimes these traders do crazy things. If they back themselves into a corner, expect traders to take big risks on Friday afternoons. Your job is to understand that on Friday afternoons, don't trade into the trend. Don't try to, just because I have a resistance area on the chart does not mean you should be selling it, okay? Put it in context, and if you don't know how to put it in context, please come out and join me as a student here at School of Trade. We get a great free trial on our website, beginner, intermediate, and advanced levels of membership. I'm going to teach you everything from setting up the office and the computer, working with your broker, all the way up to managing all the profit that you're going to be making on your trade account. My name is Joseph. Thanks so much for a great week. Please send me some feedback. My email address is jj@schooloftrade. Give me a thumbs up on the YouTube channel, right? On the YouTube video. Share the video with a friend, right? Don't hog all the great info just for yourself, and come back and see us tomorrow. We open up our live trade room at 8 a.m. Eastern time tomorrow morning. We'll be trading live in real time until 11 o'clock, and we cut it, answer all the questions, and go to break for the weekend. Next time we'll have the newsletter is next Monday. You guys and gals have a great weekend. If I don't see you tomorrow morning in the newsletter, be well out there. And who we got this weekend? We're getting another matchup on Sunday. I can't wait for Sunday. I got to say, though, I'm not too worried about Peyton this year. I love the guy to death, but I'll tell you, it's going to be a good game no matter what, but I got to root for the Patriots. I can't wait, though, to see how this weekend's football goes, right? What a great time of the year to be a sports fan. Hope you had a great week with us. I'm out of here for now. Thank you so much for your time. My name is Joe. Be nice to each other out there, will ya? I'll see you next time. Adios, amigos. Bye-bye for now.